Hi guys, it's Stock Curry, and in today's video we're going to talk about a bunch of stocks you might want to consider buying for 2022, including two stocks that I bought yesterday and today. We're also going to talk about how you can lower your taxes. So let's get into it! Alright, regarding the taxes first, I was going to put together a whole video talking about how to do tax loss harvesting, wash sales, all this other stuff. And then Larry Jones went out and he put out a video that, quite frankly, was a lot better than the one that I could have put out. So instead of putting out a shortened version with some condensed information, I'm actually going to recommend that you go watch Larry Jones' video that he put out on Wednesday. Larry Jones did an amazing job of explaining how to reduce your tax burden, including tax loss harvesting, wash sales, and a whole bunch of other stuff. So I really recommend that you go watch Larry Jones' video. It will save you thousands of dollars in taxes. I'm going to put a link for his video down in the description of this video. It will be the very first link in the description. So make sure when you're done watching this video to go watch Larry Jones' video so that you can save thousands of dollars in taxes. Those 30 minutes you spend watching this video could save you thousands. Okay, now real fast on the Discord that we launched yesterday, a lot of people are saying they are not getting the invite link in their email inbox. If that is you, if you went to the website at stockcurry.vip/discord, you filled out the application and you did not receive an email, go check your spam folder. Because the website is brand new, a lot of email providers are sending emails from my website to the spam folder. So make sure you check your spam folder to see if you got the email. Now, if you checked your spam folder and you still did not get the email, then go ahead and contact me and I'll try to get you set up. If you did not apply for the Discord yet, it is completely and totally free. I don't have a Patreon. You don't have to pay for the Discord. It is just completely and totally free. The only reason that you have to apply is essentially to reduce spammers and scammers. That's really the only reason. I'm just trying to make sure that the people who are actually in the Discord are actual real humans that aren't just in there to scam a bunch of people. So if you go to stockcurry.vip, fill out the application, you'll get an email with the invite link once that application is filled out, and then you can come join us. In the last 2 days alone, we've had over 200 people join the Discord. It's amazing. 200 people in 2 days. That's what happens when you keep things free and you make them super valuable. So I think you're going to love it over there. Go check it out. All right, let's get into the stock picks because I've got some really exciting ones you're going to want to know about today. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stocks for you. Every day I spend hours and hours and hours watching videos from the top finance channels, and then I consolidate all of their stock picks and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock and crypto picks, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you signed up for Webull in the past few weeks and you deposited your dollar and you are expecting your 5 free stocks, don't forget to go claim those stocks. You have to click on the promotion icon in the Webull app and you have to claim the free stocks. If you don't do that, you're going to lose them. You only have 30 days to actually claim them and then they're going to go away. So if you signed up using my link in the past few days and got your 5 free stocks, make sure you go claim them before you run out of time. All right, let's get into today's stock picks. And first up is AVTBF. This is Avant Brands. They're a Canadian MMJ company. Germany with Financial Education listed AVTBF as one of the 3 best penny stocks to buy now. Technically, AVTBF has been a falling knife ever since hitting a high of 87 cents back in March of this year. The lowest AVTBF ever traded was at 5 cents back in March of 2020. Now, fundamentally, AVTBF saw incredible growth in 2019 and 2020. AVTBF grew revenues by 240% last year. But this year, AVTBF is only on track to grow revenues by 50%. Now, the reason we're seeing AVTBF fall so much over the past 9 months is because it ran up so much in March. This is basically just one long correction back down to a reasonable price. The price to sales ratio is now down to 4.3, which means AVTBF is getting close to value stock territory. I do think AVTBF will perform well in the long term. They are successfully growing revenues, and the stock is trading at a fair price right now. Unfortunately, it remains a falling knife technically, so I would wait for AVTBF to bottom out before buying in. Next up is DKNG. This is DraftKings, and they're an online sports betting company. StockMo admitted that DKNG is now a falling knife. Despite that, StockMo said he is continuing to dollar cost average into DKNG, and he thinks it will perform well long term. I will remind you that if the economy does enter a recession, or worse yet, a depression, as some analysts are predicting, that gambling companies and liquor companies usually see increased sales and increased profits during these times. So DKNG could perform quite well during a downturn in the economy. Technically, DKNG is barely holding support, although it looks like it may have actually dropped below support on Wednesday. It looks like the next support level for DKNG is all the way down at $18.85. If you recall a few months ago, I was pretty much the only YouTuber saying DKNG would fall. I was a little bit off in the timing, but I was definitely correct in the direction. Now, I do like DKNG long term, but I'll need to see it bottom out and show some signs of rebounding before I buy back in. The price to sales ratio is still above 13, so DKNG has quite a ways to fall before it enters value territory. Long term, the average analyst 1-year price target is $53.50, which represents a 100% upside potential from Wednesday's closing price. And next up, we're going to talk about the banking stocks, and for this I'm going to use MS, which is Morgan Stanley. Chris Zane said back in October that he likes MS under $97, and it did in fact reach that price last week. I will tell you that all banking stocks, including MS, should perform well next year as interest rates rise. But I will also tell you that there are other banking stocks that are cheaper than MS right now. MS is trading at a PE ratio of 12.6. Meanwhile, Goldman Sachs, ticker symbol GS, is trading at a PE ratio of half of that at only 6.4. And Citigroup, ticker symbol C, is even cheaper with a PE ratio of 5.8. I personally have more confidence in GS than I do C, and that's why I bought more GS on Tuesday. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. NIO continues to fall. StockMo said he has given up on NIO this year, and he is now looking for NIO to rebound and start going back up next year. For the time being, NIO remains bearish, with the next support level down at around $22. StockMo said that despite the continued drop in price in NIO, he continues to dollar cost average in, and he bought more NIO on Wednesday. Fundamentally, despite the significant drop in price on NIO, it still remains a little bit expensive with a price to sales ratio of 13. NIO is cheap compared to a lot of the other EV stocks, but if the EV sector overall corrects next year, as many people think it will, that will cause NIO to continue falling as well. Obviously, the China FUD has not yet been resolved, and that is keeping the share price down right now as well. StockMo said he is still being patient with NIO, and he does expect NIO to turn around in 2022. NIO is already expected to report a slight decrease in deliveries this quarter, but in 2022, they are releasing 2 new vehicles, which should help increase their delivery numbers by a significant percent. And because of that, the average analyst 1-year price target is $72, which represents a 156% upside from Wednesday's closing price. Next up is PLNHF. This is Planet 13, and they're an MMJ retailer in the United States. Jeremy with Financial Education listed PLNHF as one of the 3 best penny stocks to buy for 2022. He thinks it has ridiculous upside potential in the coming years. Fundamentally, PLNHF continues to see massive growth, with revenues growing anywhere from 20 to 200% per year. Now, PLNHF is still not profitable, which is why it is still a penny stock. They do have about $23 million worth of debt on hand, but if interest rates rise too much next year, PLNHF could pay off that debt with their more than $70 million in cash on hand. Now, PLNHF is trading at a price-to-sales ratio of 6.42, so it's not a value stock. PLNHF would have to drop down to $1.85 before it becomes a value stock. $1.85 also happens to be strong support for PLNHF. So while PLNHF might do extremely well long term, it remains bearish in the short term. I think there's a good chance that PLNHF will fall down to that $1.85 level because it's currently a falling knife technically. Now, I will let you know that Jeremy with Financial Education has a completely different viewpoint on PLNHF. He is very bullish, and he sees PLNHF getting to $5.50 by the end of 2022. Now, no analysts have covered PLNHF recently, but because I pay for the ultimate version of Tip Ranks, we can see that about 4 months ago, the last analyst gave PLNHF a $5.46 price target. So that's pretty much right in line with what Jeremy with Financial Education came up with. By the way, if you want to upgrade to the premium or ultimate versions of Tip Ranks so that you can get the individual analyst price targets as well as their full detailed analysis, Tip Ranks is offering 22% off through the end of this year. So you've got basically 2 days left to upgrade for Tip Ranks and get that 22% off. I will go ahead and put a link for the 22% off in the first comment of this video. Next up is SDC. This is Smile Direct Club. They're a manufacturer of teeth straightening aligners, and they're also a direct competitor to Invisalign. Jeremy with Financial Education listed SDC as one of the 3 best penny stocks to buy now. Now, in the short term, SDC remains a falling knife, and it continues to hit new all-time lows each day. But is it a good stock to buy for the long term? Well, if we take a look at the revenue growth, it's not good. In 2019, SDC saw revenues grow by 77% year over year. But in 2020, SDC saw a decrease in revenues of 12%. Now, if we attribute the revenue decline last year to the pandemic, then we should see a significant increase this year. And so far, we haven't really seen that. SDC only grew revenues 1% year over year in Q1. Now, they did see a 60% increase in year-over-year revenues in Q2, but then they saw an 18% decrease in revenues in Q3. So something is wrong with Smile Direct Club's business that can't be explained away by the pandemic. And declining revenues is the last thing that you want to see in a company that is not yet profitable. Their balance sheet isn't looking much better. They have over $700 million in debt and only $300 million in cash. That means SDC is going to struggle even more next year as interest rates rise. Now, all of this negativity has pushed the stock price down considerably. SDC is currently trading at a price-to-sales ratio of 0.39, which puts the stock deep into value territory. So if you like Smile Direct Club, the stock is fundamentally very cheap right now. But I really think it's important to look at the business that you're investing in and not just look at the stock price. And with Smile Direct Club, there is something seriously wrong with its business model that is causing them to realize decreasing revenues when they should be seeing increasing revenues. So now the key is to look for something that might turn this company around. And that could be new management, a new business plan, or even a buyout opportunity. And Jeremy with Financial Education let us know that SDC recently pivoted to take on their main competitor Invisalign. SDC is now targeting dentist offices directly rather than just focusing on direct to consumer. That could be the key that turns their business around. Germany also let us know that STC has started selling dental products such as teeth whitening kits, UV cleaning machines, electric toothbrushes, water flossers, and more. Now, if you think that will be enough to turn the company around like Germany does, then now would be a great time to buy in for a long-term hold because this stock is very, very cheap right now. But if you don't think that will be enough to turn the company around, then you have to realize that this stock is technically a falling knife right now. Debt is double their cash on hand, revenues are decreasing, and STC will have a lot of trouble staying in business if they can't get their revenues and EBITDA up next year. Next up is SOFI. This is SOFI, and they're an online fintech startup. SOFI has been trading fairly consistently between $15 and $25 over the past year. This has turned into a really nice swing trade. It's for that reason that I sold a bullish credit put spread on SOFI on Wednesday. I sold the $12/$13 bull put spread for January 21st. So long as SOFI closes at or above $12.81 on January 21st, I will make money with this play. And SOFI has not closed below $13 since January 3 of this year, or almost 12 months ago. It bounced off of the $13 level twice in the past year, and I think it will bounce off of that level again this time. That said, I will tell you that technically we do not have any confirmation of a rebound yet, as the candles remain below all of the EMAs. So this is certainly a riskier play than most of the multi-leg options I trade, but I'm betting on the historical trading pattern holding up and for this swing trade to work out. If you don't want to trade the options and would rather just swing the stock, I would buy in now for a swing back up to $25. But I would also set a stop loss at $13 in case SOFI fails to swing back to the upside. Stockmo expects to swing back to the upside also, and he said he continues to dollar cost average into SOFI for a long-term hold. For a long-term hold, the average analyst one-year price target is $23.71, which represents a 64% upside potential from Wednesday's closing price. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a U.S. resident, or if you're looking to trade OTC penny stocks, or if you just don't like payment for order flow, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the world. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I do have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and if you're on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.